Welcome back. I want to take a quick pause mentally in terms of thinking about NIO stock price because there's lots of fluctuation. The stock is a roller coaster. It's not fun to be invested in NIO currently, I have to admit. And although we saw a little bit of an uptick in the last couple of trading days, still, I mean, we can't be satisfied with where the company is, but where the stock is even more so. And so I want to offer you a little bit of long-term thinking here, and also, a little bit of an outlook and how I'm personally thinking about that. So, the context here is that I finally found more time again to work on some of my Excel sheets. So these are the Excel files that I usually use for showing the earnings of NIO and the financial estimations. I've done my own business case here for NIO, where I see the valuation in a couple of years down the road, and aligned with that my personal investment target. And while I made videos about that in the past, this really needs to be updated. There has been so many things happening with NIO, the company, but also macroeconomically. And so I started working on that, updating the assumptions and the variables going into that. It's not about presenting them today. I actually going to do Patreon videos first. So feel free to join the community. You can also help me with your own questions and things that I should consider when recalculating the case. Just send me a private message on my Patreon. But anyways, in the long run, I'll definitely offer my second views where I think my updated stock price target is. But for now, I think looking at 2024, there's actually a two-faced stock, if you will. It's kind of a little bit schizophrenic, if you will, because if I look at the social media discussions, or also retail investors, frankly, but also the analyst coverages, or what YouTubers are saying, and so on. It's mostly simply about growth numbers and year-on-year numbers, quarter-over-quarter numbers, even the crazy stuff like the weekly numbers provided by Li Auto. And I think the first half of this year actually will be about something different with NIO. And I hope investors will agree with me about this over time. Let's have a look here. I want to open the financials analysis here, the income statement. Where I want to take a look at is the net income. Here we are. So what does it show us is basically how unprofitable NIO has become in the past. But this is about to change, hopefully. What I think we're going to see here, and what I've mentioned also before, is hopefully a decline in those negative bars here, which are representing money outflow, net losses, right? I think there's a good probability that with the Q4 quarter that NIO still has to report, as well as the Q1 and Q2, these numbers should be looking better than the last couple of quarters, where we kind of had this double bottom here around minus 800 million quarterly net losses. And the reason why I'm saying so is, first of all, because of the cyclical nature of the industry, and not many people buying cars in Q1 and Q2. So yes, this also means what I just mentioned before. There might be just weaker sales numbers during that time, especially now, February with the Chinese New Year. I personally don't have very big expectations. If they manage to do great year-on-year numbers, managing some growth there, that's already pretty good, I would say. But whereas I think this is kind of a two-faced stock here, I think the real growth will happen towards the end of the year, Q3 and Q4, again, especially with the sub-brands being launched additionally. And so the first half of the year will basically, in my point of view, the story will rather be about the net losses becoming better and better. And, again, this will be partly due to the fact that there is cyclical factors playing a role, but second of all, also due to the measures that NIO has taken. So we had the JAC takeover by NIO for the manufacturing, meaning they don't have to pay such licenses, which I've calculated here again, and this is going to save NIO millions, hundreds of millions of USD quarterly going forward. There also have been the layoffs, which I said when they happened that it will take some time to being worked into the company financials. So maybe not the Q4 report, but Q1 and Q2. I think that is when we start seeing the effects. Also, again, definitely, close to hundreds of millions that can be saved on a quarterly basis again. Let's start with the implications in the first phase where they are fading out the jobs. It might be just a couple of millions in that beginning, but over time, this will really show up significantly. However, we might also see towards the end of the year that these net losses will start to go up again, meaning that there will be more net losses. So this is actually a negative development, right? But it would make sense because that's also when they are selling more cars again, and they are possibly also starting to invest a little bit more again for expansion after having made those cost cuts and now having hopefully a clearer picture. That's when we might see an expansion of this number again as well. But then the interesting idea will be, or the insight will be, whether or not they manage to grow the unit numbers in a proportion more and higher than actually the underlying cost per unit. And that's something that could play out already in 2024. While this is not profitability, still what matters will be the direction of this, and that these are really hardcore financial facts that Wall Street, I think, should be rewarding, because that has been one of the main bear theses around NIO stock, that they are burning too much cash. If we're really lucky, then we'll see also some contribution on the service side, like NIO Life and battery swapping, battery swap stations, monetization. If that will also kick in during that time on top, that might be a major surprise, I think. But in any case, given how the company is currently traded on the stock markets, and I think also, relative to competitors, we can see that the investors are definitely not buying into that this is going to happen for sure, right? I think some out there might see that this might be one of the cases and scenarios, but given how much the stock is selling off currently, I don't think it's currently priced in that these bottom line financial improvements are actually about to happen. So this might be if you're seeking alpha, the delta opportunity between the estimations and the actuals that are hopefully going to happen. Whether or not that's really the case, maybe NIO raised lots of cash because knowingly that these financial bottom line metrics will not actually improve, and that would be then basically a confirmation why the stock has sold off so much and why this negative view by investors is actually the right way of looking at the stock. But I think there is a probability and one scenario and case in which that's actually not the case, and we will see much better underlying financials in the first part, and then in the second part of the year actually also on the growth metrics. And that could be kind of the double whammy. That could be something very difficult for the shorts to recover from, if that will ultimately lead to profitability, because then the question for them is, at what point can they cover their stock? I mean, now it's currently quite cheap to cover, right? But there's still, the last time I looked, 160 million of shares short NIO stock. So it's going to be interesting already this year, despite the fact that it's unlikely to going to be the profitable year. But these are the metrics that I'm looking out for. And then stay updated for my updated business case in a couple of days, possibly. Thanks for watching, and see you in the next one.